We're back here on First Up, the first stop in your busy day, and we're going to be switching focus now, putting the spotlight back on Budget 2011-2012, taking a different perspective on it though. This one is for the investors and those who want to know, well, what to do with their savings and how to manage their portfolios. We've got our friends from the Unit Trust Corporation in with us this morning. Back with us, we've got Portfolio Manager Justin Silva, and we also have the Assistant Vice President for Investment Management Services, Karen Guydeen Gosain. Thank you for joining us. Welcome back.
Thank you.
So the big question everybody is asking is, how is this budget going to affect me, the investor?
Well, what we have seen is that there are a number of incentives in the budget, or a number of provisions in the budget. Remember, the government is the enabler of growth in any one economy, and it's left for the private sector, individuals, to actually be the engine of that growth. So what we are seeing is that in terms of stock market activity, we hope to see an increase because the government has indicated that it's going to share its wealth by divesting some of the state-owned companies. For example, First Citizens Bank, there's TTMF and Home Mortgage Bank in one holding company, Plipdeco 2, as well as, for example, there is an incentive for small and medium enterprises to actually list on the exchange. There are particular, requirements. For example, you must have minimum capital of 5 million up to 50 million, with at least 25 shareholders owning 30% of the capital base. And what you find traditionally is that those type of entrepreneurs with the ideas who are usually risk takers, they're starved for capital. And given that they are now allowed to come onto this junior stock exchange and list, it will give investors an opportunity to provide that capital and enjoy in the rewards, having understood the risk that they're taking through these equity type vehicles.
How come everybody doesn't explain it as easily as you? I've heard since the budget was read, 1 million people explain that SME 5 to 50 million, small investors, they 35, but you just made it so clear. What is the difference between junior stock exchange and what normally applies? What's the difference?
It is the size of the company. And the junior exchange is not as well capitalized, or in a mature stage of the company cycle as the normal company. So you would expect to see a lot of startups. These are typically companies that could not have gone to the bank and gotten financing because of their risk appetite. These are companies that have a lot of potential. These are companies that could have been family-owned, and they need capital to grow and diversify, but they could not do it by themselves, so there's a lot of opportunity in this junior market.
Justin Silva, when you hear this from your perspective as portfolio manager at the UTC, what does this mean for small or medium-sized companies in terms of readying themselves to take advantage of this obvious opportunity to build capital from a different source now to help grow their businesses?
It's a very exciting prospect, really and truly, because the thing is about Trinidad and Tobago, historically we've been classified by more or less traditional financing methods. For example, just savings and loans in the commercial bank. The president of the TTMA actually spoke to this just recently, and I found it very interesting point that that traditional financing has been not really, of course, it has been more or less the policy framework which we have followed and has kept our financial sector very solid. But the risk appetite by our financial institutions in themselves have more or less not hindered the progress, but has slowed the innovation that our private sector companies can take with respect to the fields that those sectors they like to go into. Energy sector is a primary example, and you won't see a lot of small private sector companies going into the energy sector. However, this junior listing is a huge opportunity for them to finance themselves to go into the energy sector now. You typically would not find a bank giving a loan, or you wouldn't see a private sector company taking a loan to go into the energy sector, because you have possibly 12 to 48 months of just expenses, and then you have a windfall of cash coming in which you could use to repay a loan. Now you actually have the opportunity to finance this yourself on the stock exchange, where you get your money up front, you issue your shares in the market, you have your capital base which you could use to start up your business. So it's a very exciting prospect in that terms.
The thing is, though, that with such an injection of cash comes great responsibility, because you no longer will have sole control over your company. You have to answer to those shareholders who decided to invest in you. Are our structures ready to accommodate that kind of development? Are companies aware that this kind of responsibility comes with this ease of access to cash?
I think that it is a transition that has to be made. There are the companies that have been listed on the stock exchange. So companies are aware of the listing requirements, of the responsibilities of being a public company. But I think that there will be an initial challenge. And so as from an investor's perspective, you need to understand the management of that company and look at their credentials and their experience in determining whether or not you want to take that risk.
That having been said, and all the explanations having been gone before, does this mean, can we safely say that this budget will ignite the growth that we need in our economy?
Certainly. The budget focused on the government being in the enabler of growth. We saw the CSO for 2011 putting out estimates of negative growth of 1.4%. In the budget, the projected growth is 1.7 positive. What we see is a focus on revitalizing the energy sector. We know it's a critical sector. We also know that there is a problem, or there is risk in focusing on any one sector in the economy. And so we know that there needs to be diversification across the other sectors. But what has been said is that it is something that's going to take time, so focus on what you know your revenues are going to come from. So there are several projects that have been put in place. For example, the AUM2 plant that we expect to have create employment of approximately 3,000 initially in terms of construction phase, about 450, full-time employment. There's the Carisal 2 project. There are a number of projects that are in the idea generation phase that will take time to bear fruit, but the fact that in terms of the budget, has provided this framework in which to give incentives in the energy sector to pursue those opportunities to provide growth is a good thing. In addition, if we were to look at the diversification aspect, there are incentives for renewable energy, there are incentives for construction activity in other areas. And so we see growth coming from all over. We are seeing a new agriculture, or in terms of a land use plan, that will assist on the side of reducing the cost of food, that will rebound, into the economy and whatnot like that.
As a portfolio manager, as portfolio managers and advisors on people's financial future, when you see these opportunities coming, and no doubt it will take a while, the finance minister was our guest yesterday, and he says he can expect to see some traction within as little as 6 months in some instances. Certainly the AUM2 and Carisal will take some more time. But when you're advising investors now, so you've been telling us to diversify our portfolio, we've looked outside and we look inside Trinidad and Tobago in terms of options for diversification. When I'm starting to look at these new options now, several small to medium-sized businesses are going to option this new issue that the minister has put on the table. What should we be looking for in terms of companies getting themselves ready to say, that's a good option, that's not a good option? This may need some time to settle down. This is on the way in terms of putting systems in place to protect my investment.
Well, with respect to looking for good investment options, in terms of, for the average investor, I just want to talk quickly about the investment strategy on the whole. So we're going to just overlap the top issues which we would have covered in previous interviews. One, of course, is identifying your risk appetite, and of course your time horizon. They're both correlated. The longer your time horizon is, the higher your risk appetite. Well, the more risk you can afford, but not necessarily need to take. The shorter your time horizon is, the less risk you may want to take, right? But not necessarily
if I'm 25 years old, I can take more risk because I have more time.
You have more time to recover.
If I'm 55 to 60 years old,
correct,
and I'm going towards retirement, retirement, I have to be more judicious in terms of the types of risk I take.
Well, if you're younger and you're going towards retirement and you have 30 years to save for your retirement, you could take on more risk and you have more opportunity to grow your investment portfolio. If you're saving up for, say, to build your house in the next 5 years and you only have a 5-year time horizon, you might want to be a little more conservative with how you actually invest your money, because you don't really want to take a chance of losing that money within a 5-year time frame. But with that said, we see, for example, with, of course, the growth initiatives by the government, and of course, that calls for a lot of spending, a lot of construction. We see we're very bullish on stocks. That means we're very optimistic on the performance of the stock market in Trinidad and Tobago. So, of course, we see a lot of opportunity in the securities which will have exposure to the construction industry, and of course, with job creation, once the government is successful in that, we'll be very bullish on companies who have exposure to consumer discretionary. That's luxury goods, for example, automobiles, imported goods, etc. So the conglomerates, well, rain or shine, conglomerates are always really good to buy, but I mean, especially since the two major conglomerates in Trinidad have exposure to both the construction industries, to consumer staples and consumer discretionary items. Those are very good stocks to look at. And naturally, of course, depending on how the capital market takes off, we could always look at the commercial banks. Those will also do very well, as well as the non-financials. With respect to bonds, we are very positive on bonds in the short term. Bond prices and yields have a inverse relationship, in that as bond prices go up, interest rates go down on the bonds. Now, there's a high demand for bonds right now in our country. That's because, and as spending increases by the government, you'll see, and they issue more bonds. Because of the amount of money that's being pumped in the system, there will always be high demand for bonds. So you'll continue to see the prices on bonds going up in the short term, and interest rates going down. For the investor who may not be able to pick and choose, though, because of course you wouldn't really want to go for bonds, say long term, without that outlook for interest rates, because you'll be susceptible to, of course, the price risk on your bonds. For investors who may not be able to pick and choose the bonds that they will want to get into, of course, we offer the Growth and Income Fund. For the medium-term investor, we will be able to manage that portfolio of bonds as well as equities for you. And for the longer term, we have the Universal Retirement Fund, which is a long-term horizon fund aimed at people who are saving for retirement, which also has a balanced equity and
so it all depends on your stage in your life and your goals.
Yes, of course.
Can we just rewind a bit the stocks that you're saying that we should buy? Conglomerates, car dealers and makers, banks, those are safe bets.
Those, I mean, well, as I said, shine conglomerates are always safe bets. Safe bets. But I mean, ideally, remember that we are surrounded in an environment of uncertainty, because, I mean, a lot depends, and this has always been for years and years, a lot depends on execution of a plan, of the budget, and a lot relies on that. And you always want to, especially in these times, buy companies with sound fundamentals, right? That is companies who have strong balance sheets, have strong cash flows, low levels of debt, and low levels of recurring expenditure, right, and manageable overheads and high dividends.
When I hear the options outlined in the budget, and I know it's a different scenario, another issue comes to mind for me in terms of protection of my possible investment. We've had the debacle that is ongoing. People are supposed to get some resolution as to that. When we hear the stock market being expanded, as it were, what sort of regulatory safeguards should we see, given the fact that we've seen some shortcomings in regulation before where that is concerned, and now this is opening up a whole new ball game, you know, and asking people to be a part of this in terms of playing their individual parts in spurring the economy forward. However, I don't want to take, as an investor, I may be more risk averse right now because of the drama I've seen going on in the past 3 years. What should we be looking for from the authority in terms of putting things in place to make sure that we are protected from situations like that?
Well, I think with the equity markets, it's a bit different, because when you take equity risk, you take the residual risk in a company, right? This is your own decision. What you have to do is start at the individual level, understand the amount of risk you're taking, and diversify your portfolio. So if you're risk averse, balance your portfolio where you have a very small portion, you know, exposed to equity risk and a larger portion exposed to fixed income instruments and whatnot like that. Remember, the higher the return expectation, the more risk you take on. And I think really and truly it should be more at an individual level. Yes, the regulatory authorities need to ensure that there's a proper framework for these companies to be listed and there's transparency in their operations, that they you know, submit financials on a timely basis so that the companies can be analyzed properly by investors. But I think that investors need to take ownership and understand the risk that they are getting into.
And the Junior Stock Exchange is a fine example, is a fine way for Trinidad to finally stop talking about financial literacy and actually get very involved in it. Legislation and, of course, overall governance framework is very important from any respect. And I think history has shown that our stock exchange has, they've taken action when securities have not been adhering to the regulations. And perhaps, I mean, I guess it's a work in progress. I mean, that eventually we will work towards a more proactive system. But I think it has shown that they have taken action against companies who have not been adherent to the regulations. But the ideal responsibility lies with the investor to go through the accounts of the institution, ensure that these people are reporting properly, have solid financials, and when they invest in a sound company rather than a company who is not sound but is offering the world.
That said, what about those startups that would be looking for support, who could become the next big conglomerate maybe in the next 5, 10, 15 years? How do you pick, you know, those if you want to encourage that kind of development in the market?
Well, first of all, you have to buy into what they are selling. You have to, be confident in innovative ideas. You ensure that you understand their philosophy. You look at their projections very keenly. And at the end of the day, diversification. We come back to that same point. Ensure that if it is that your risk appetite is such, only take 2% of your portfolio and invest in that. Remember that you don't make, a huge sum of money overnight. It has to be consistency in investment. You have to be very disciplined in your approach, and over time you will reap the rewards.
So diversification, once again, is the way to go. Yes. Ladies and gentlemen, thanks for being with us. We, of course, run out of time. It's never enough time. We're going to have to give you an hour next time to go through the budget. We're talking to Justin Silva, a portfolio manager at the Unit Trust Corporation, and also Karen Guyadin-Gosayan, who is the Assistant Vice President, Investment Management Services at the UTC, and they can guide you through this expanding financial world in Trinidad and Tobago. Go check them out. We'll take a break for the news with Stacey and Providence and come back with folks from the TNT Film Company right here on First Up. Stay with us.